It's such a small market, Patrick. Total global production of silver is only $20 billion. So it's a very easy market to control. And they absolutely have had to control silver going back at least 30, 40 years because the dollar is in competition with gold. Gold is the anti-fiat, the anti-dollar. And there's no way you could have silver running to 200, 300, 500, $1,000 an ounce and gold not move. So in order to be able to keep gold in a box and be able to point at it and say, see, gold bad, dollar good, they've had to just sit on silver with paper contracts that are completely unbacked.
The latest annual World Silver Report reveals that 2024 marks the fifth consecutive year of significant silver shortages, with this year's deficit being particularly severe. In 2023, the gap between silver demand and supply created a structural market deficit of over 142 million ounces. The report forecasts that this annual production shortfall will nearly double to 265 million ounces by the end of 2024, driven primarily by rising industrial demand. BillHolter, a financial analyst and precious metals expert, underscores gold and silver's critical role as safeguards against economic instability. According to Holter, silver's market remains relatively small and easily manipulated, with global production valued at just $20 billion. He argues that silver has been controlled for 30 to 40 years due to its competition with the dollar. Holter believes that if silver prices surge to $200, $300, or even $500 an ounce, gold would inevitably follow suit, reflecting a broader shift in the precious metals market. Silver continues to lag behind despite gold's recent steady rise, reaching a new all-time high. Gold's ascent is attributed to ongoing global political and fiscal challenges, inflation concerns, geopolitical tensions, and uncertainty surrounding the future role of the US dollar. In contrast, silver's performance remains constrained despite its essential role in industrial applications. Holter also observes that silver trades at a 3 to 5% premium in Shanghai compared to Western markets. This disparity has reduced silver inventories in London and New York, while boosting Shanghai's reserves. Recent data indicates that Shanghai's silver stock has dropped below 1,000 tons, potentially the lowest level since the market's inception. Additionally, silver stocks tied to companies involved in silver mining or holding mining properties fluctuate with global industrial conditions. When major economies like China experience growth, these stocks often give investors favorable returns, reflecting the silver market's dynamic nature. Get ready for BillHolter's interview. Don't forget to subscribe and hit the bell icon to stay tuned with our latest updates.
It's such a small market, Patrick. Total global production of silver is only $20 billion. So it's a very easy market to control. And they absolutely have had to control silver going back at least 30, 40 years because the dollar is in competition with gold. Gold is the anti-fiat, the anti-dollar. And there's no way you could have silver running to 200, 300, 500, $1,000 an ounce and gold not move. So in order to be able to keep gold in a box and be able to point at it and say, see, gold bad, dollar good, they've had to just sit on silver with paper contracts that are completely unbacked. They came out in the early 2000s with the ETFs. And if you read their prospectus, do they really need to buy any silver or any gold? No, they can be 100% contracts and still be following the prospectus. So they don't have to have physical metal to control the price. They're doing it through paper contracts on COMEX, CME. And if you look at what's going on in Shanghai, there's what, a $3, $4, $5 premium of silver there versus silver here. And what's happening is you're getting an arbitrage where silver is being depleted from the inventories of London, of New York, and it's ending up in Shanghai. And it's interesting to note that the Shanghai inventory of silver just dropped. I think they're less than 1,000 tons now. That's the lowest it's been for quite a while. Or I think it might be the lowest it's been since they started that market. Long story short, they've had to suppress silver. They cannot let silver look good. They cannot allow the public to stampede into silver because if that happens, then gold blows, and when gold blows, so does the dollar system.
That's a great point there, Bill. Appreciate that. So let's say someone listening to this, or they're considering buying precious metals.
I mean, if you're just starting, you want to have silver because you're going to barter with silver. When the system goes down, silver will give you on hand money. And gold is that's where you transfer your large wealth from this system to the next system. I would say if you've got 100,000 US dollars or less to invest, I would do all silver. And if you had $1 million, I'd still do 70-30. I'd do 700,000 in silver and only 300,000 in gold. And as that ratio comes down to say 40-50, silver will have outperformed double over gold as far as purchasing power. And you can sell some silver, buy gold, and you'll end up with more gold ounces than if you just bought it outright today. It's a ratio trade, is all it is.
BillHolter highlights that the dollar has been weaponized for years, a strategy that has gained momentum, particularly during the previous administration. Recently, this approach has intensified, as demonstrated by the seizure of $300 billion in Russian treasuries, which are now being utilized as collateral to support Ukraine. This bold move exemplifies how the U.S. leverages the dollar as a strategic tool in the face of escalating global tensions. Despite accounting for only about 20% of the world's economic output, the dollar wields substantial power, commanding more than half of global currency reserves and trade transactions. This dominance, rooted in historical agreements and monetary policies, underscores the U.S.'s ability to shape international financial dynamics and respond effectively to geopolitical challenges. Let's get back to the video.
The dollar has been weaponized for years and years, and they started ratcheting the weaponization up during the previous administration. And now they basically stole the $300 billion of Russian treasuries, and they're borrowing or using that as collateral to fund Ukraine. So it's been totally weaponized, and there's been pushback. The pushback has been the formation of the BRICS. And we're only 2 months away from the big BRICS meeting in Russia. And I think that very well could be, if you want to call it the reverse Bretton Woods moment, where the dollar actually loses reserve currency status because they no longer want to trade and use dollars for settlement. And the amount of dollars that have been used in settlement, that's been, it has been declining, but it's going to go off a cliff. And especially if they announce a 20 to 40% backing of their new currency, they're calling it the unit. That currency with 20 to 40% gold backing, you'll see pure fiat currencies collapse, and you'll see the price of gold explode. If we truly had 8,300 tons, I mean, you look to the east. I mean, China's probably got 35,000 metric tons. I mean, I can show you easily, 25,000 tons. There's no question in my mind that they have that amount. But the U.S. does not have that metal that they can revalue and, if you want to call it, refurbish their balance sheet. Um, they don't have the gold. They don't have there's no big stockpile of silver. At this point, all it is kick the can down the road. They're trying to pretend and extend. We just had an event, a week and a half ago. Japan's market collapsed. They lost 25% in 3 days. And I view that as, that's the warning shot of the global margin call that's going to come. And I expect that margin call to come between more than likely between now and the election. And we were told that the carry trade was 20 trillion. That's basically on books. Then you got to add the OTC to it. And is the number double? Is it triple? Is it 10 times? I mean, is the carry trade really 200 trillion and not 20 trillion? I mean, who knows? But what they're trying to tell us now is that 75% of the carry trade was eliminated in 3 days. And that is complete bullshit. There is absolutely no way that 20 trillion was unwound. And what took 30 plus years to build up was cleaned up in 3 days, and no one died.
As financial markets evolve amid economic uncertainties and geopolitical shifts, the roles of gold, silver, and the dollar will likely adapt. Historically, gold and silver have been reliable hedges against inflation and market volatility, a trend that may continue as new challenges arise. The dollar will maintain its global dominance, but will be affected by changes in monetary policy and trade dynamics. What topic would you like us to cover next? Let us know in the comments below. If you enjoyed this video, give it a thumbs up, leave a comment with your thoughts, and share it with your friends. Don't forget to subscribe to our channel and hit the bell icon so you never miss an update. Thanks for tuning in.